You can receive investment income of almost $20,000 a year from an investment portfolio without paying any income tax in Australia under the current rules. Now, a lot of people don't factor this into their investment planning, but it means that you're missing a trick. Now, in Australia, you don't pay any tax at all on the first $18,200 that you earn. And when you factor in the low income tax offset, it brings up the effective tax-free threshold to around $20,000 every single year. What this means, if you're thinking about your investments, is that you can run a portfolio that's giving you dividend income of up to this level without paying any tax, so long as this is your only income. Now, the rough rule of thumb when it comes to investments is you should be expecting an income of around 5% each year from a portfolio of investments. So that means that if you've got around $400,000 in a share portfolio, it's probably going to give you an income of around $20,000 each year. But you can make that number higher if you structure your investments in the right way. For example, US shares typically pay lower dividends. You look at a company like Apple, the dividend yield, the percentage return in terms of income is only around the 1% mark. So what that means is you can have a much bigger investment portfolio and getting the same income and not paying tax on it. When you're planning your investments, you want to know how much you need to get the outcomes that you want, both in terms of the income and in terms of the growth for the future. So don't ignore this fact, or you could be selling yourself short.